Hello everyone. This video is going to be covering our new indicator, Nutshell, which was just released last week. And because this indicator has a number of components to it, what we're going to do is divide this up into two videos. This first video that you're watching now is going to cover more specifically the individual parts of the indicator and give you some examples so that you can like compare it with price action and understand exactly what it's showing you and maybe some thoughts behind the settings that you may use. And of course, as I go, you'll see some of the connections between what the indicator is showing versus the price action. However, as far as the details on how you may actually use these components to fit your particular trading style, I'm going to leave that discussion mostly for the second video. And in that second video, what I'll probably do is actually treat it as if we were doing a live trading session, except I won't be doing it live. I'll use the replay functionality, but actually go through a real trading session, of course, biased towards my particular trading style and trading strategies, and show you exactly how I use this particular indicator in conjunction with other tools that I use, not necessarily other indicators, but other ways of managing a trading strategy. And so we'll save the discussion for how to use this in trading for the second video. But let's get on to what this indicator actually is showing you, what all the different components are, and how you can configure them. Now, before we get started, in case you just stumbled across this video on YouTube, this particular indicator, Nutshell, is created for the TradingView platform only at this time. And it is a premium indicator, which means that it is not free. And you can get a free trial version of it or purchase it at kickstudios.com, which I will leave some of the links below later. Okay, but let's just get right to it. All right, I'm going to start here. I'm looking at an Nexo chart, just happens to be a particular instrument that I've actually been looking for an entry on. So I've kind of been doing some analysis on it today already. I'm going to take our Nutshell indicator here and blow it up a little bit so we can see it better down here at the bottom. The other thing I'm going to do is I'm going to talk about it in different parts. So I'm going to turn off areas at a time. So the first section I want to kind of have us focus in on is, get rid of all of this. There we go. So we're just going to focus on the volatility instruments here, and there's actually a few others that I'll turn on here in a moment. So the bright colors that you see here are a measurement of price volatility specifically. And in this case, we're actually measuring that using a percentile ranking of the average true range. I prefer ATR versus something like historical volatility percentile, HVP, because it actually measures the distance that the price is traveling, perhaps within each candle. So for instance, this candle here where the price went all the way from down here all the way up there, and then the next candle from there all the way down here, you see that led to very volatile readings. However, if you were only checking, say, the close, and you had these two values, they're fairly close together. So with HVP, and it's not always close that you have to of course look at. You could be looking at HL2 or any of the other price components, but essentially you're only looking at one value per candle with something like historical volatility. With ATR, you're looking at the whole range of the price action. Okay, so when you see the price action in purple, and especially very close, very small in range of motion, this is telling you that the volatility in this area is very small. As it grows, as you see here, we have this grew into something big, and then it became a little bit more volatile. So it moves from purple into orange, and then red, and then finally pink. So pink is the highest volatility, Um, and if we look at the settings that are related to this, there are these first two basically. So we look at a sample and the reference section. So the sample basically means, like, let's say the value that we're going to calculate for this particular candle, we would take a look at the last 8 and compare the volatility of that last 8 to the reference sample. So that is the moving average of the 8s going back 96 candles. Okay. Just as a side note, if you're looking at like a stock, you may want to actually change these settings depending on what you're looking at. So if you're using something like 30 minutes or even, like a 130 minute, which would be 1/3 of the trading day. Is that right? Yeah, 1/3. Then these settings should work just fine. However, if you're looking, say, at like the daily, okay, you can still use these settings, and what you're basically doing then is you're comparing the last 8 days to the last 96 days, and that's not necessarily, I mean, it'll still work, but you may be better off changing those to something like, say, 30 and 365, so that you're comparing the last month of volatility to over the previous year. Okay, and as you see here with something like Amazon, we had a period of very, very low volatility here, which then grew into our big COVID-19 drop, and then our subsequent like rocket rally here that we've been going on. Okay, let me jump back here to Nexo. And we'll go back to 30 minute. So one of the things that I want to sort of point out, in addition to, let's see, here we go. Okay, in addition to the volatility calculations here, you see these green bars in here. When the volatility reaches very, very low, actually, let me go ahead and change these back. 8, 6. Okay, something like that. When it reaches low, the reason we want you to take, be attentive to that is that volatility tends to move from low to high and back and forth, and it can go up or down at any point. However, when it's at its very low, it can only go in one direction, which is higher, because we're already at the very low. So normally, when we see extremely low volatility, we know that a larger move is probably imminent. Okay, now it doesn't tell you if it's going up or down. That's why we have the other components of the nutshell in there to tell you. But like, let's look at right here. Here we had very low volatility, stayed low, stayed low, stayed low. Right here, volatility started expanding. Now, again, we can't say just with the volatility information if this was going to go up or down, but indeed it did go down. And if you see from right here, even on a 30-minute chart, over the course of about 2 hours, it moved 6%, which is fairly volatile. And we even had gaps. And normally, obviously this particular instrument doesn't trade super heavily, so we do have the gaps, but that would have been a great short right there. As far as the other colors, you'll have to kind of test this with your own instrument, but because I found that they all work a little differently, especially like Forex versus stocks versus crypto. But especially in crypto, one of the things that I've noticed is as we enter a large move, so here as we go into the pink, when it gets to the red, probably that indicates a change in direction or momentum. And then when it gets to orange, same thing. And then when it gets down to purple, again, probably it's going to change direction. It doesn't always have to work that way. um, but it's sort of tuned that way, especially for, like, say, Bitcoin. Um, Another thing that I would mention here is that I always try to enter my trades uh, in the purple. Now, it might be in big purple like this, but it's very dangerous to enter trades when the volatility is already super high, because you will tend to get whipsawed around quite a bit. And so, but I do like to ride out volatility. So, for instance, I may, if for some reason I entered this position right here, I may enter it and ride it all the way through this volatility and perhaps not exit until here. So why here? Because, I mean, obviously this peak would have been a great place to get out, but it's purple here, so that tells me that this is still fairly, it's building in volatility. So could stay in it until I get to this point where we've actually gone into very high volatility, and then as soon as it returns, out of this pink area, it kind of skipped down. I guess this is red right there. That's probably where I would have picked my exit point. Now, of course, this kept going up after that, but that's okay. You can get other entries. Okay, so that's just one of my strategies, is to always enter during relatively low volatility, ride out the high volatility, and then find your exit point. Okay, so before we leave volatility discussions, there's one other component that's related to volatility, and that is our gravity tunnel squeeze. I'm not seeing any here in this particular. Okay, here's one. Actually, let me switch over here to, let's go to Bitcoin. All right, and I'm going to switch to daily. All right, then let's see if we can find a place where, all right, so here's one. So all the yellow that you see in this particular chart, and actually I'm going to just hide this green right now so we can see it better. Okay, whenever you see yellow dots like this forming, that is an indication that the gravity tunnel is squeezing. So it's another, it's a slightly different measure of volatility. But when it's squeezing, at some point it's going to release. So when it gets to that release, you'll see a full yellow bar. And at that point, you should expect a large move coming as well. Also, the duration that it was squeezing usually gives you a good idea for either how far the move will go or how long the move will last. I think for me, usually it's how far the move will go. So since this was squeezing for 1, 2, 3, 4, 5, 6, 7, that's not a terribly long time, but anything over 4 is going to produce this squeeze release bar. And as you see here, if you entered at that point, and then even just took this down, I mean, that was a 20% move. Okay, so quite, and of course we're also on a daily, so these moves are exaggerated. Okay, here's another one right here. So you notice it squeezed for quite a bit longer. Okay, and then here's where we had the release. Now notice at the point of release, we actually had price action going in the opposite direction before it continued up. So you would want to be careful with your entries here using the other momentum directional indicators that we'll be talking about here shortly. But from here, I mean, arguably, I think this move probably went about to here, which is 16%. Had some continuation of 20% there. Obviously, if you stayed in it all the way up to here, 35% move, but it's unlikely unless you are a longer term trader that you would have held on to it. I mean, that looks like about a month's time there. Although, going back to our other volatility indicators here, you notice that we were purple. Here we did go into the orange, and so that's why I kind of said right here, when we come back into the purple, would be a good spot for taking profit. Um, but if you stayed in it all the way through till we got into this higher volatility area, you would obviously hit closer to this top. Okay, so those are the volatility calculations. I'm going to turn those off now, and we're going to look at some momentum indicators. Okay, so our primary momentum oscillator that we have here is this white line. So we just call that the swing line. As you see, it loosely follows price action, although it is a little bit of a lagging indicator. I mean, any of these indicators, whether it's MACD, wave trend, stochastics, RSI, they all use price action to calculate their values, and so therefore they are going to be lagging indicators. This one, I find, really does do a pretty good job of staying closer to that price action. But of course, it's all with a trade-off. So the closer that you make it to the price action, then the more kind of whipsawing back and forth and more noise that you will see. Okay, so there's a couple aspects to this. Let's look at the settings first of all that are related. Okay, your swing length and the signal length. So basically, if you make the swing length shorter, you will get more sensitivity in this, but that obviously means it'll also give you a little bit more noise. So if you increase this value, it will strip out some of that noise. However, you'll have fewer signals, and they'll be more lagged. The signal length is really just a smoothing value, so I find that it works pretty well to keep it roughly 2 times the size of your swing length, just to give it a little bit better smoothing. Just so you know, though, the higher you make this number, the more lagged the indicator will be as well. And then the last is this velocity coefficient, which is going to control the size of this blue histogram as we go here. And I'll talk more about that in a moment. But for the most part, this is really just a visual. So if I make it 5, the peaks are more prominent. If you make it smaller, they'll be less prominent. However, that doesn't actually change anything related to the values. I mean, it does multiply the values by this number, but you'll see why you want to keep this at a point where you can see it, but it's not in the way. So depending on the instrument you're using, you'll potentially want to change that. Okay, so the way that these get used is when you see a red dot, then this is a cross down. And so momentum at this point has crossed to the downside. So you would expect price action because of momentum to fall to the downside. When you see the green dot, it's going back in the other direction. Now you notice, let's see, this green dot actually has a cross inside it, whereas this green dot here only has a black dot inside it. So the crosses that happened at the outer extremes, that is the overbought and oversold areas, are going to have those crosses, which generally indicate a stronger cross. So this cross here to the downside is, potentially, more. Let's see, I'm going to cross 2 down. These are all crosses up there. Well, you take like this one, for instance. This one is not as strong of a cross. And as you see, it only went down to here before we reversed. Okay, now the blue line that you see here is the velocity of the swing line as it's moving up and down. So let's say that you were right in this area and you saw that this cross happened. Okay, and so you get in the trade here. We follow it all the way down. Now we have a candle going back up against us here, and you notice now this blue line is going back up. But because it's fairly far away from the 0 line, you know that we probably have quite a ways distance before we get that cross up. So that's how you use this this blue line. The blue line, every time it crosses the zero line, that's where you'll get either a red or a green cross. So if it's crossing down, you'll get a red cross on the swing line, and if it's crossing up, like right here, then you'll get a green crossing up. So you can use both the distance away from the center line to give you kind of a forecast of when to expect that that new swing cross, or also using this slope of and the steepness of this blue line going up and down to give you an idea of how fast it's approaching that zero line and where to expect that cross to occur. Okay, so that is our price directional movement momentum swing indicator there. Okay, so moving on, the next thing I want to show you let's see, is this line. So, and actually I should have left, I'm going to leave the swing line on here for a moment. These circles across the top, which are green and red, are giving you a volatility adjusted volume wave. So in a lot of ways, it's it's basically a Weiss wave. So if you're familiar with Weiss volume waves, that's what it is. However, ours is a little different because we adjust it for volatility. So based on the volatility that the price action is experiencing using ATR, we make changes to the calculation that gets used to actually calculate the number of bars that get used for this. So basically, it's going to be slower to react in general than the momentum swing, but because it has that volume aspect to it, this is the only component really within this whole suite that is using volume. It gives better confirmation of directional bias. So for instance, here, they just happen to coincide that we have a momentum swing to the upside and a change to the upside in our, let's call it VVW, okay, the volatility volume wave. And right here, notice that we have three interim momentum swings, but this basically stayed green the whole time. It doesn't change to red until here. So, I mean, a couple ways of looking at that. You know, back here would have been a little bit better entry than right here. However, if you didn't enter until the close of this bar, so at the open of the next one, you still would have caught this big down, which is about 20%. Okay, and you would have done it without having to deal with the chop kind of going through here. So you can use it in any way you want, of course, but I generally use it as a way of giving me an extra confirmation that's more conservative than the momentum swings on directional bias. So for instance, here, I see the momentum swing and it's even a cross down here. However, we're firmly, into a volume wave downtrend. Okay, so that may give me enough pause to decide that this is maybe not a good place to take a trade. Excuse me. And as you see, it did have quite a bit of up and down here before we actually went to the upside. Okay, so or what you might do is you might wait until you see that change. Of course, that wouldn't have helped you a lot here because then it pretty much went down right after that. But you get my idea. It's a slower moving, more conservative directional bias indicator that is using components of both volume, and it's a continuous volume, because that's what a Weiss wave measures, is um, the kind of a continuous addition or subtraction of volume based on the selling or buying biases. Okay, let's move on to the next one here. I'm going to turn on is our LWADX. Okay, and it's hiding right down there at the bottom. And you notice we have just two indicator colors, just like the top line, so we have the blues and the oranges. Basically, if we're blue, we are considered to be trending. Doesn't mean we're trending up or trending down, but we are trending in some way. If you see orange dots, then that means we're in a chop zone. And you would probably think twice before entering a trade. Now, you might still ride it through if you're already in a trade, but generally not a great place to enter trades when you're in a non-trending area, because you're not going to really be moving. It's just kind of moving sideways, like we have right through that section and like through this section here. Okay. As far as settings go, we have two: the period and the DMI. So this LWADX is just a variant of the normal ADX DMI, where it generally is better to use smaller values than you would if you were using a standard ADX DMI. And then the calculations, which aren't really relevant to this point because we're only showing either a dot or a dot, one color or the other. But they are calibrated so that, if you're above 50%, you're trending, and if you're below 50%, you're not. So it does work better as an oscillator than your typical ADX DMI indicator. Okay, we just find it to be a little bit better at trend detection, although the math behind it is pretty much the same as with an ADX DMI, with the exception of the oscillation calculation. All right, so there's a few more. The next things we want to talk about are, I'm going to turn these off. And last, we're going to talk about our signals. So we have dump warnings, pump warnings, topping and bottom indicators. Okay, so the spiral is an indication of a strong move in one direction or another. So they usually happen at directional change points, of course. And by the time that they show up, you will have seen quite a strong move. So in some ways, you will probably feel like you missed the move. Like in this candle, I bet that this spiral did not show up until, we pumped all the way up to here. It is a pump detector. However, the way you use this is, especially depending on your instrument, your time frame, when you have a strong pump like that, that is usually quite the bullish signal. So yes, for this particular candle, you probably would have missed the move by the time that the indicator showed up. So sure, you would have missed the 40-some% move off the bottom there. However, even if you got in right here, and of course you could take this drawdown, it did still continue moving up another 100+%. So that's that indication. Here we have the opposite, which is a dump detector. Now this one, you notice, who knows if this move is finished or not yet. But even if we only looked at the initial move down here, we've moved about 8%. And these numbers are large because I'm looking at Bitcoin, which is highly volatile, and I'm looking at it on a daily. So things move quite a bit. Here's another example of one right here. I'm not sure where in this candle this would have appeared, but if we just measure from the bottom to that top, This was about a 40% move. Not that you would have probably gotten out right here at the top, but there's that. Now, these triangles that you see here are bottoming and topping formations. So when you see them together with a pump indicator, that's usually a really good sign. The idea for them is to hopefully help pick out tops and bottoms. Uh, they're not going to be, of course, necessarily as strong of an indicator. And I don't even really see very many here with Bitcoin, at least not at this time frame. We'll look at a different time frame here. All right, let's jump down to like a 4 hour. See if we can find any. Huh, it's very strange. This is that same big down that we saw. So let's go down to 1 hour. Okay, here's a few more. That one doesn't. Okay, so here, this topping indicator, oh, well, it looks like it happened right here at the top of this wick. So not a great example because, of course, there's a Darth Maul type of candle here, so it went all the way down. Let's go down even further to like a 15-minute. Okay, so we have one here. So that is a topping. The other thing with these triangles, these will appear right away. So you won't have to wait for the entry. So this one showing up here, in this move, a little more than 0.5%. No, actually, I measured wrong. Okay, maybe about 1% or so. But of course, I've also gone down to 15-minute here. Some of them aren't as good as others. These are horrible. I mean, this was the top of this move, but we're so bullish at this point, we hardly had any retrace before it took off again. Here's one that was a little better at the bottom. And of course, we also had the pump indicator present. And this short move took about an hour to go about 1.25%. Okay, here's another one that found this particular top. And then we had quite a bit of down. That looks like maybe about 5%. So they're good indicators. I wouldn't, treat them as the sole thing that I was trading on. However, when you see them, you should take notice of what else is going on within the nutshell indicator and also any other indicators that you're using, and of course the price action. So now let's bring everything back in. There we go. And let's see, did I talk about all the settings? Yes, I did. Okay, so with everything kind of put together, you can kind of see how you might how the indicator was built to have all of the different components that you want. And by the way, these, I didn't mention it, but these topping indicators and the bottoming indicators, they are primarily using divergence detection for them to be able to find things. And we are at present using 12 different oscillators and seeking divergence on them to determine where and when to show these topping and bottoming signals. And we'll probably add more. Actually, I just finished adding another one that was more of a sentiment type of indicator. That's an oscillator, so it's a sentiment oscillator. And so when we find divergence on it, that gets added to the formula now. Okay, and then I didn't mention about the spirals. So the spirals look for a strong move using um, three moving averages that are stochastics, but they're using like third generation moving average formulas. So NMAs, if you are familiar with the work of Dershner. So they're much more sensitive to price movement, which would tend to give you a ton of bad signals. However, by using three of them at different lengths all at the same time and only looking for when they overlap at the extremes, that's how we're producing these pump and dump indicators. All right. So I think that wraps up the different components and what they mean, how to use them. Part of this video. We've already gone 35 minutes. I'm going to wrap up and just say that if you're interested in seeing an example of a trading session on how I would use this indicator as well as my other techniques, then look for the companion video to this one that will be coming out here shortly. Also, if you're interested and you don't already have this indicator for your own use, I would encourage you to come over here to kickstudios.com, and if you actually just put in /tools, it will take you to this page. And right here at the top, you can see Nutshell, and there we have many other indicators, as you see here, available for purchase as well. If we click on this, then that will take you to the purchase page, but also on this page, you can request a trial. And at the moment, we are doing 3-day trials for free. However, especially like with this particular indicator, we're kind of toying around with the idea of extending that to a little bit longer. So if it's more than 3 days when you get here, then we have made that decision. So take a look at that, and I will go ahead and end the video here. Thanks for watching, and I hope to hear from you soon.